Welcome to Larking Gowen Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance, with a variety of presenters from across our specialisms. So, let's get on with today's show.
Welcome to our podcast. I'm Lizzy Lloyd, a medical partner in Larking Gowen. I'm here today with my fellow medical partner, Louise Dean, and we're going to talk about the McCloud judgement and what it means for NHS Pension Scheme members. So it's called the McCloud judgement or the McCloud Remedy because that was the case that came about, and it's to do with the reform of the pension schemes, all public scheme pension schemes, which the government tried to do in 2015, I think. Isn't that right, Louise?
It is. Hello, Lizzy. Thank you for the introduction. Yes, you're right. In 2015, the government announced a reform of the public sector schemes. And as part of that, they brought in the new 2015 NHS Pension Scheme. So we currently have 3 different schemes in play at the moment for NHS pension members. When the 2015 scheme was introduced, there were different benefits attached to that. So there was no lump sum, for example, a later retirement age linked to state retirement age, and a higher benefit rate of accrual. The issue arose because it was a compulsory transfer. So when this scheme came in 2015, not all members were forced across. It was dependent on how old you were, as at 2012. So the younger members, who at that point were more than 10 years away from retiring, had to go in either straight away at April 2015 or at a slightly later date. They had some form of tapered protection. So because there was no choice in the matter, some of the younger members effectively took offence to this and thought, well, why do we have to do it but not the older members? Ultimately, it's not fair. So there were a couple of groups of people, one of those being Judge McCloud, who effectively took the government to court on an age discrimination case, and they won. The government have had to consider how they effectively can reverse this age discrimination, and the McCloud Remedy was born.
Interesting. So yeah, there's three currently sections of the NHS pension scheme. We've got the 95, the 2008 and 2015, and I guess somebody could be in all 3 sections.
Yes, potentially. Not too often, I must say. I haven't seen many. I've probably only seen a handful where they're in all 3. And the reason being they tend to probably only be in 2 is when the 2008 scheme came in, there was a choice. There was a choice that they could transfer their benefits from the 95 into the 2008 scheme. And they would have had different reasons as to why they would or wouldn't. So that's where we're now in a different situation with the 2015 scheme, because there was no choice. Now, you may have someone who would have benefits in the 95 and the 2008 scheme. For example, if they initially joined the scheme, had a break of more than 5 years, and when they rejoined, the 2008 scheme came into effect and were then forced into the 2015 scheme. It's really not very straightforward.
They sound like the confusing people, but it's going to be confusing for all, because currently you've probably got people in the 2 sections in the 1995 and 2008, unless they've started after April 2022 in the NHS pension scheme. We'll come on to that, shall we, with the McCloud and why April 2022 is applicable. So the McCloud judgment is better for people of the NHS pension scheme where they're in 2 sections, because it remedies an age discrimination that applied previously. So should we talk about what the government's response and the McCloud Remedy will do for people in the NHS pension scheme?
Yep, absolutely. Let's have a look at what the government are or have proposed to do to effectively rectify. So, what they have said is in order to remove the age discrimination, ultimately at April 2022, everyone, no matter how old or young you will go into the 2015 scheme. It's almost like a reset. Like the transfers back in 2015 didn't happen. So the clock will be reset at April 2022. So all members will now, going forward, contribute into the 2015 scheme. But what they have to then do is think, okay, well, what's happened in this last 7 years between 2015 and 2022? So the consultations about different proposals and how they would approach that 7-year window and the decisions that need to be taken. And what was agreed is members' benefits in those 7 years will go back into what we call their legacy scheme. So the scheme they were in pre-2015 scheme. So it could be the 95 scheme, it could be the 2008 scheme. So your benefits now will carry on accruing in that scheme as if you had never transitioned up until 31st of March 2022. You will then transition over to the 2015 scheme.
But when we say transition over, they're not going to lose the benefits that they've built up in their legacy scheme at March 2022, are they? Those are frozen, protected effectively, can't go down?
No, they can't go down. They are protected. They will remain there until you reach the relevant retirement age, depending on what scheme you are in. They will go up because effectively you're still an active member of the scheme. You're just contributing to a different element of it effectively. So you will still get the what we call dynamisation. So it's an inflationary uplift to those benefits. Now, it depends whether you are a hospital doctor or if you are a GP, because they have slightly different rules on how the benefits are accrued in the 95 and the 2008 scheme. So if you are a hospital doctor, you will continue to have your final salary link in your old scheme. So as your pay goes up, the benefits in your legacy scheme will continue to go up. If you are a GP, then you are no longer putting your pensionable pay into that scheme, but you will get this dynamised inflationary uplift plus 1.5%. If we ever get into the point of a recession, your benefits won't go down because we can't have a negative inflation in the 95 or the 2008 scheme. It's just treated as zero. So haven't lost anything. They will remain there until you decide to draw them.
So do you think, or what if a person thinks, actually, I quite liked being in the 2015 scheme from 2015. I don't want to now have it all reset back and join from 2022. Have they got a choice of anything that they can do?
Well, they are very much in luck because, yes, there is a choice. And as part of the consultation process, when the government were considering their options, they looked quite closely at when this choice would be made. And there were two proposals. The first one being that you decide now, ultimately, and that decision is whether you want that 7-year membership to go back into your legacy scheme, or you would have preferred to stay in the 2015 scheme. So they looked at the timing of that decision, and was it now, ultimately, or was it on retirement? And the ultimate decision was that members would have until they draw their pension benefits to effectively make that decision. It's very difficult to know what to do with something in the future, because individuals wouldn't know their circumstances. They wouldn't know how their earnings would change, where their careers may go, what life is going to throw at them potentially in the next 20 or 30 years. So that was a big deciding factor in why this decision is now going to be made at retirement.
And actually, that's quite topical, isn't it? That's a great thing that they've got time to make that decision, because in the recent budget, we've lost the lifetime allowance limit, potentially. So somebody who may have thought they may be drawing their pension benefits earlier, so staying in an older scheme may have been better, may now wish to go on longer. So, as you say, who knows what's around the corner for people individually, and you can't make a decision now about your retirement. What does somebody do now? Obviously, this McCloud Remedy hasn't been applied. It's been decided potentially what's going to happen. But if somebody today was going to look at their pension benefit statements, we know they go on the Total Awards Service section of the website of NHS Pensions to be able to look at that. But what would it show? Would it now show them what their revised 1995 or 2008 pension benefits will be?
Unfortunately not at the moment. So there isn't anything you can do at the moment. You just have to it's a bit of a waiting game. So initially, NHS pensions were given until October 2023 to make all of these transitions behind the scenes to update everyone's benefits. Now, as I'm sure you can imagine, there's thousands of people in the NHS scheme. So it's a huge task, which they're having to do alongside all of the other work around annual allowance, lifetime allowance, retirement, changes to legislation from changes in budgets, which is a whole different story. So that deadline has now been pushed back a year. So I think the cutoff is now 6th of October 2024. For NHS pensions to have updated everyone's membership records. As I understand it, after that point, you will have effectively 2 total reward statements to show you what the benefits would be in either scenario. So scenario A, here is your pension benefits if you put those 7 years back into your 95 or 2008 scheme. Or scenario B, here's what your benefits would be if you kept them in the 2015 scheme. And the idea being that everyone has this information year on year to aid with the decision making, so that as they go through, they can see what the comparisons are. But I think ultimately the thing to remember is everyone is different. No 2 pension situations, unfortunately, are the same. What may be right for one of your colleagues might not be right for you. So ultimately, we would always suggest you seek financial advice when considering your options, because as you referred to before, people may have been leaning one way about when to retire because they were worried about lifetime allowance charges, for example. So now if they're thinking, okay, well, I'm maybe I will work till 67, 68. So the 2015 scheme may sound like a better option because you get more for your money ultimately. So I think seek financial advice, take into account various factors around, when you were planning to retire, what level of pension are you thinking you'll need to sustain your living requirements? Do you require a lump sum? All of these will be very much part of the decision making. But ultimately, nothing to do at the moment. Just have to sit and wait for NHS pensions to update all of this for the members.
It would also be quite useful if the individuals who are listening to this podcast could consider how long they're going to live for, because ultimately that would help them in making the decision on when to draw their pension. But what about if you are retiring? Because if you're young, you've got time for the NHS pensions to sort out the mechanics of looking at the pension pots in both scenarios. But I've got a number of people who have already drawn their pension benefits, although we know they're going to have to change, aren't they, for the McCloud Remedy. So they might be drawing a small bit in the 2015 scheme, which won't potentially be there once the McCloud Remedy is applied. I think, if I'm right, the NHS Pensions Agency are trying to prioritise the calculations for those individuals, aren't they?
Yeah, I think that was the plan, that those who had already retired were top of the list, and then I would assume a common sense that they would almost then work through the older members, like you say, because those who are younger have longer to make the decisions. So yes, there will be revisions if your benefits are already in payments. You are no different. You still have this choice to make. But you're right, there may not actually be any 2015 scheme benefits for you to draw now. So it could be the scenario that someone had built up a small pot in the 2015 scheme and has left it untouched because they may have been quite far away from the normal retirement age, didn't want to lose any via the abatement. So these figures may work in their favour because they would ultimately have extra that they can draw now. They'll then have their lump sum recalculated, which would be paid. I would assume, although I don't know, actually, Lizzy, if you've got any thoughts whether there would be any interest added onto those benefits that have subsequently been recalculated.
Well, I think we'll just have to wait and see, because there's also going to be obviously tax adjustments as well on revised pension benefits, and tax-free lump sums that are going to maybe come out to be paid additionally. And I think if they're paid more than 12 months after the original benefits were crystallised, they're not necessarily tax-free, because I was looking at one the other day, albeit not in relation to the McCloud judgment, but just in a revaluation of a pension estimate that was over a year old. So the more you dig into this, just how complicated and all the things you've got to think about, it sounds really. And we haven't even touched yet on the thorny issue of the annual allowance pension tax charge, which I feel like we need to get on to now.
Yes, this is the crux of it.
So yeah, if your pension is going to be revised back 7 years, and we know that how the pension grew in one scheme is different to the 2015 scheme, the growth in every year, which is used for this pension tax charge, is going to change. What does that mean for the last 7 years, where people have paid pension tax charges, submitted tax returns with estimates or final figures on, or done scheme pay elections? Thoughts, Louise?
It means there's a whole lot of fun coming everyone's way. Ultimately, yes, we need to go. Well, the royal NHS Pensions need to go back and recalculate all of these figures for every member in back to the last 7 years, because again, everyone is impacted by this, and the growth figures could go up as well as down. It could be that some unfortunate people have maybe avoided a charge or stayed below their 40,000 or whatever their personal allowance may be for the annual allowance, and they may have subsequently breached it. We don't know at the moment if every member will automatically be sent revised figures for the pension growth for those 7 years. I suspect not. I suspect if you're over the 40,000 allowance, then you will be sent the figures automatically, because that's what they do currently. But yes, we are going to have to review all of the figures because they do make errors. So the figures will need to be checked to make sure that the member is happy with them. Annual allowance that they're entitled to may also have to be calculated, because if they have suffered tapered allowances in the past, that is also linked to the pension growth figures. That would also need to be recalculated. And then, yes, subsequently, depending on whether you've had a tax charge that's now either reduced, increased, gone completely, or you didn't have one but you now do have one, there will be then the fallout with the amendments to the tax returns. If you had a charge and it's reduced and you paid the tax personally, HMRC will obviously refund you the tax. But on the flip side, if there's additional tax due, you will still have the option to pay this personally, or if you've done a scheme pays election, you should be able to revise that election. Or if you didn't have a tax charge and you do now, and you would like to submit a scheme pays, then you will be able to retrospectively go back and put those in, despite the deadline being passed for some years. So there, a lot of work ahead.
Yeah, I feel like there needs to be a lot of good admin going on here. From a practical point, for the last 7 years, so from 2015 to 2022, nobody can assume, if they're in the NHS Pension Scheme, that perhaps their tax return is final for those years. And I suppose my recommendation would be that they make sure they've got copies of those tax returns, because they could change tax advisors. You want to make sure you know what was submitted. Those little brown envelopes that used to come through the post with the pension growth figures on, make sure you've collated all of them, or even better, perhaps speak to the NHS Pension Scheme and get a summary of all the figures. They do something called a growth extract now, don't they? Or service extract? I can't remember what it's called.
Yeah, it's an annual allowance and service extract. So it's an Excel sheet that they can email across. It's a secure email, and it shows you your pensionable pay across all schemes. So whichever scheme you are in from day dot, I believe. And it then also shows you your pension growth figures in each scheme, or again from as far back as you've been, or as far back as annual allowance has been in force. And it is a really useful document. So normally you can just phone them up and they'll ask you some security questions, and you can just request annual allowance growth figures and service extract, and they should just email that across to you straight away. But yeah, admin is key. And really, I think this can be quite daunting. I still speak to a lot of clients who openly admit they've buried their head in the sands when it comes to this. And sometimes the brown envelopes, when suddenly one lands, it's a prompt. Yes, it can be a bit, can throw up some surprises. But ultimately, from the ones I've spoken to, they generally just feel a bit of a weight lifted once we've looked at it, whatever the outcome may be, because either it's not as bad as they think it's going to be, or they just are happy that it's sorted and they're not going to go to jail, is often what I hear from my clients. But yeah, admin.
So and make sure you've got a medical specialist accountant, somebody who understands this, because we still come across clients, don't we, who have never, as you say, have never looked at this, or have had brown envelopes with figures on which they've done nothing with, or are really large and clearly wrong, but they put them on the tax return and paid the tax. So, getting somebody who understands and can interpret the figures has to be key, and getting as much information now to check your pension is correct. And that total rewards statement, or whatever it is really good for that. But there's been a load of budget changes, hasn't there, on pension tax charges? But this is not going to help what's happened with the McCloud Remedy, or what will happen, because they're all future changes, aren't they?
There has been, I think, relatively good news coming out of the budget, and also some consultations that came out at the start of the year. But yes, they are all from April 2023 onwards, and what we're covering off today is purely up to April 2022. So there is no crossover. There will be impacts potentially on the McCloud Remedy, as we spoke, because one of the changes is the abolition of the lifetime allowance, which could, as we said earlier, impact the decision making on what you want to have happened in that 7-year window. But these are two very separate matters. And I think also we talk about the annual allowance, and it can be, it's really good to know what's going on, and if you've got tax charges, and kind of just get all that in order. But it's also just really good common sense to know what's going on with your pension, because we've seen so many errors, gaps in records, because quite often with doctors in training, you're on 6 monthly rotations around the hospital trusts. So you're moving quite often payroll to payroll to payroll. There can often be those 6-month gaps in the records, which will ultimately impact your pension benefit. Even if you don't have a problem with annual allowance because you're maybe relatively, young in your career, it's still really good practice to check your pension record to identify any gaps. Because it's a lot easier to correct them now than when you come to draw your benefits in 30 years.
Exactly. Where we found gaps in service for some of our older clients, they haven't got the pay slips, or they're somewhere in the back of the loft. Much easier to do it while you've got the relevant information to hand. So I think we've probably covered off everything at a quite high level on the McCloud judgment. Basically, there's a lot of rabbit holes we could have gone down. We may have gone down today. But what are the key points? That they just wait now until it's applied. But if they're drawing their pension benefits, maybe maybe they need to take specialist financial advice, particularly because of if they've got lifetime allowance protections, etc.
So yeah, I think absolutely things to think about at the moment. Just know there isn't anything to do unless, as Lizzy said, you have already drawn your benefits. Then seek financial advice. Now, just be mindful who again you seek that advice from. Accountants can't always give financial advice. So you may have to go to an independent financial advisor. Again, make sure they understand the intricacies of the NHS pension, because it's quite different than most other pensions, most other non-public sector pension schemes. I think really my biggest piece of advice, slightly outside of the McCloud, is to just take the plunge, check your benefits, have a conversation with someone if you are worried, because they may be just able to alleviate your concerns, or they can certainly guide you through the process, or hopefully, just help you to understand what the implications are. As we said at the outset, we have a specialist medical team. So by all means, if you wanted to get in touch with us, you can find us at larkinggowen.co.uk and visit the medical section. We always try to put things on LinkedIn, on social media, or if you already have a contact at Larking Gowen, then by all means get in touch with them as normal.
I think that's everything for today. So thanks very much, Louise.
And thanks, Lizzy.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.